Good morning, everyone. This is Brian Dallum with FS Grain, bringing you a Tuesday market update on today, October 5th. Give you a couple quick things. I want to keep it short since we're all in full-on harvest mode here. Speaking of harvest, in general in Northern Illinois, the consensus is that beans have been very good and surely better than expected. I think in general, we had an awfully dry August across Northern Illinois, which we would have assumed would have hurt our bean yields, but in reality, somehow they seem to be doing above average to very well in certain areas. A few guys here and there telling me on good dirt, they set new records. So seems to be a pretty good bean harvest in general. And, I would expect that we're probably nearing 70% finished on soybean harvest here. So things have moved right along. Corn, still unknown to this point. It seems like we're all just starting to get into our corn harvest here and there. A lot of the corn that's been done to this point has been some of the down corn due to wind issues and rootworm issues and things like that. Kind of hearing things totally across the gamut here that, the down corn is anywhere from, at best, 35 bushels below the standing yield, or even 75 bushels at the worst. So really been all over the place, but not good if you're one of the unfortunate guys doing some down corn here. One thing I have heard from a few guys that did some fungicide trials is it appears this year that fungicide paid off again. Lots of things: anthracnose, stalk rot, tar spot in the corn. One of the trials that I heard about here last week down in the Princeton area was that there was a 42 bushel per acre difference in yield from the non-applied fungicide spot to the applied fungicide. So it seems like that was a good payoff this year if you did it. And then in general, if you do have standing corn, certain areas were able to avoid the wind events. Seems like we had, or we're looking at awful good yields there. A few guys telling me they've been very, very happy with the good quality standing corn. So hopefully once we can find that and you're all into it, that things are better there. Moving on here, we'll take a quick look at where the corn market has been. On the left, you'll see December 21 corn futures. Currently, we're around the 537 area. Now, you will note that since the end of September, we've had a nice little rally here. From the mid-September through now, where we've rallied off the $5 futures level all the way up to a high of around 540. Currently at 537. So obviously, we are off from the $6 highs we saw this summer, but certainly take note here. Corn's made a nice little rally up, probably because the yields have been so unknown to this point. So we'll have to watch that moving forward. And then if we flip over to December 22, this is one that's really kind of stood out separately from everything. New crop being the 22 crop that we haven't planted yet. Futures have made a significant rally and in fact made new contract highs yesterday, almost hitting 540 on the board. Currently around 530. This is something I want guys to pay attention to. This could be a reaction to the fact that we know input costs are going up next year. But in general, that's really been a breakout to the high side there. So contract highs on December 22 corn futures, does it warrant a guy getting his first 5, 10, 15, maybe even 20% hedged in some fashion there? I think that's a good conversation worth having with your merchandiser. So let's take a quick look when we get a chance on rain delays, or if we've got time in the combine going back and forth to really think about our plans for next year's crop. Switch over to soybeans. On the left, November 22 futures really been leaking lower. You'll note since the quarterly stocks report here last week, we had a significant drop there. A lot of that was somewhat foreseen, so we decreased our demand. Not entirely surprising with the debacle in the Gulf, with the hurricane slowing logistical ability to move soybeans to export. But we also saw the USDA revise the 20 crop carryout and made it a little bigger. Production bigger. So what that did intrinsically is we doubled our carryout on soybeans right now. That was a surprise, and we saw the market react to that. I think you'll also note that we probably are leaking lower with these good yield reports coming out that we're seeing. So we have three things going on here. We have the fact that yields appear to be better than expected. Our carryout is bigger than expected, and our demand is lacking due to our inability to logistically move it. So you have three bearish things there that I think are really pulling the soybean market lower and may have, in fact, really changed the paradigm in the bean market. So, you know, if $12 cash beans are good enough, coupled with 70 bushel yields, we may want to look at that and decide if it's worth just, you know, taking the money and running, or if you want to gamble on something down the road. But again, I do feel that maybe the sentiment of the bean market has turned bearish here for the short term. We flip over, look at November 22. Same concept here. You know, I guess I don't want to lose sight of beans for next year. If we do actually have more beans on hand than we originally anticipated, and that brings a bearish feel, that will bring Nov 22 lower as well. You know, today you've got a chance at eking out maybe a $12 cash price for the fall, or maybe a little bit higher for December, January of 22, 23. That might be something worth grabbing your first sale on. You know, if you want to get your first 5-10% done. Soybeans can change in a hurry, but grabbing a $12 net cash price or some fashion there close to that might be a good idea. Okay, let's a couple outside markets here that have really jumped out at us as the energies. Natural gas skyrocketing from our spring summer lows, making huge streaks higher. We'll have to keep a watch on this as we go through the winter here and see if, you know, if our natural gas heating bills are going to be elevated due to cold weather or whatnot. But boy, that's something that's really skyrocketed here recently. Also, you'll notice the crude oil making new highs as well, around $78 a barrel. This is good for ethanol. The higher the crude oil market gets, the more profit there is for the ethanol markets, thus more demand for corn. So that's friendly, but maybe not as much in our gas tanks. So things to kind of keep an eye on that will affect our markets moving forward. And I guess I'll wrap this up here real quick. A couple things to note. As all reports, it seems, have been this year, they are a big deal in the market. Take a quick look here. October 12th, next week, so that's a week from today, 11 o'clock, will be the USDA WASDE report. Chance for them to adjust yields, also acreage, all kinds of numbers there. Unknown what they're going to do, but I will tell you that it's going to be volatile. So we will keep our eyes to the screens there at 11 o'clock a week from today. Also, as you all know, with your discussions with your fertilizer suppliers, prices are up drastically, as much as 75% for your potash and your dry fertilizer, things like that for 22. So make sure you're keeping busy this fall, but we have our eye on what we're going to be booking for input prices for next year. So I guess with that, I'll wrap it up. Wanted to keep it short today. Hope everyone's having a good harvest and making progress. We encourage you always be safe when we're working out there. We'll talk to you again here next week with another market update. Thanks again.